Welcome to Wall Street Confidential on TheStreet.com TV. The cheap dollar continues to spur acquisitions here on our territories. This morning we're hearing from Eisai, a Japan firm buying a U.S.-based biotech MGI, among some other deals in the biomed space. And this is, of course, a prediction of Jim Cramer's that we're going to be seeing a lot of these deals.
Well, what's interesting about both the MGI Pharma and the Adams is that neither of those companies is considered to be that great.
Yeah.
Again, just speaking candidly about it, Adams missed a quarter or two. Their Mucinex thing is very competitive. If you go to you see that if you go to the drugstore, you'll see all the other products that are lined up against it. MGI had disappointed and then put itself up for sale. They have some very interesting anti-nausea drugs for chemo. Interesting that Celgene's selling down on that, and Revlimid. I'm trying to get my arms around the Celgene. I haven't been able to do it yet. But MGI and Adams are examples of companies that the Europeans and East Asians would regard as being very much on sale when you factor in the 50% decline in currency. So what they're thinking is, okay, look, we haven't been able to we can't go in and we can't buy Johnson & Johnson, but maybe we can get in and buy Adams and take up some shelf space. Reckitt has historically been an acquirer of cast-off brands. People who remember the breakup of American Home Products recognize this company as coming in. That's the Japanese company that's coming in here. I guess they too would like more of a platform. That one I a little more question because I just think MGI is not that great, but it doesn't matter. What this is all a concept here is that they're looking at assets to buy at a 52-week low for them because of the currency, even though the stocks have spiked a little. And I've been saying over and over again that the thing that drives foreign investment in this country is not the actual property that they buy, but the fact that they like to think that a currency's bottom. These are true signs, again, that the dollar is done going down. And anybody who thinks it's not is crazy, because why the dollar was going down was because our growth was anemic. As the Federal Reserve cuts, our growth will be less anemic. People like to put money in a country that has good growth with low inflation. That's what drives the currency. There's always been this misunderstanding in the media, which is that what people want is high rates. They don't want high rates. They want a strong country. And so I think the dollar bottoming is a very bullish story for 2008.
One final question, if I may, Jim, for investors who want to call the next deal, okay, the next foreign buy. So obviously not looking at synergies necessarily, but what stocks have hit the 52-week lows?
Well, I don't know. The Genlight was a company, which was a really good company that was down on its luck because it's viewed as a cyclical business. Activision was a company that made a lot of sense, big fit with Vivendi. This has eluded me because I don't like to talk about it typically because they're buying companies without great fundamentals. So, I mean, what you need to, they're buying companies with either cyclical fundamentals or companies that are perceived as being overvalued, like Activision. I think MGI is overvalued. So it's difficult to try to figure out the course of the foreign buyers. What I'm just saying is it's bullish for the overall market, and it's difficult for me. I was trying to put together a segment, again, on Mad Money. I did banks already, and that didn't really work that well because then bank earnings are so bad. And it's made me chastened into trying to pick out another group that could get bids because the banks, the fundamentals were so weak that I ended up hurting people. So I've been unwilling to speculate on which is the next group.
All right, but this is definitely buoying the market. Thanks a lot, Jim Cramer. This is Wall Street Confidential for you on TheStreet.com TV. Stay tuned.